Have you ever had it where you buy crypto, it seems to dump, and you sell crypto, it seems to pump? Well, I've had that in crypto for many years now. And why I do a strategy in these videos of buying at support and selling at resistance, and it does seem to help with that. As a long-term investment, we have to look at something a bit more different. Now, I've looked at a lot of companies doing a thing called crypto seasons, and I've looked into a lot of data analytics and trends. And here at Crypto Ripto, we've put something together to look at what we see as the crypto seasons. You know, we're buying in the spring, we're selling in the summer, we're buying in the autumn, we're selling in the winter. We're following the trends, the patterns, the news, the FOMO. But what the aim goal is to have one chunk of money, put it in, and then let it mature through the seasons by buying in a crap market and selling in a good market and turning them cycles to your advantage. Well, if you want to learn a little bit about this and want to know more, stay tuned and let's get into the video. By now on these videos, you know anything that's not financial advice and it's just educational purposes. So let's jump straight into the crypto season. To deal with the crypto seasons. Now, many of you will know they will look at Bitcoin season and altcoin season. These are the two main seasons that a lot of people know. When Bitcoin's kind of pumping or going sideways, we tend to see the altcoins money flow into Bitcoin. When Bitcoin's doing really well and climbing high, we tend to see the money flow out of altcoins into Bitcoin. And this is known as the alt season or Bitcoin season. And this is readily available on the net at blockchaincenter.net. And that's where this graph's from here. But here at Crypto Ripto, we've been looking at some of the companies and some projects that are looking at the 4 crypto seasons. And we've also been trying to define that for what we invest in and other people. So we have put together a little thing to get through what we think crypto seasonality is. Crypto seasonality is the perception that Bitcoin will rise and fall over a set period of time, drastically affecting the crypto market overall. Now, Bitcoin is the world's largest cryptocurrency as well as the first ever one. As the first cryptocurrency, it has a ton of value locked up in it at all times, and all subsequent coins, otherwise known as altcoins, are tied to it in some way. However, Bitcoin is no stable asset. The world's first cryptocurrency is constantly ranging in value, dropping or rising tens of thousands of dollars, and at any point it can drop or it can pump. Every 4 years, this volatility is expected to reach a peak before crashing relatively hard due to the Bitcoin halving that you may have heard about. Now, the Bitcoin halving is programmed into the Bitcoin blockchain. Every 4 years, the halving occurs, and the rewards for mining Bitcoin are cut in half, effectively ensuring less Bitcoin is coming into circulation with every block mined. Now, the market tends to correct after a halving, with Bitcoin's price rising due to the more scarce nature, only to crash shortly afterwards as investors cash in their newly earned profits and the market overcorrects as a result. While Bitcoin crashes, more investors begin worrying about their investment and may pull out to move funds into altcoins, and this is what drives altcoin season. Now, is crypto seasonality good or bad? Well, it affects everyone, but whether it's good or bad depends on your investment personally. Now, crypto seasonality can be seen as both good and bad depending on your perspective and investment personality. For one, newer traders might see seasonality as a good thing, as they can now invest in Bitcoin at a lower price. Long-term holders, however, might despise crypto seasonality as their Bitcoin holdings are almost guaranteed to crash every 4 years, forcing them to wait out the lows or reinvest their holdings into altcoins. Now, that said, one can almost always expect Bitcoin to rise back up due to the supply and demand. While this belief is never a guarantee, the leading cryptocurrency has historically risen higher highs after each halving so far. So more on weathering the crypto storms. Now, tokens are designed to rise and fall over the course of 9 months, hoping to provide investors with more stable alternative to Bitcoin downtrends. Now, we've seen this vary in trends to trend, and with the smart money coming in, the trend has seen a bit of different one in the Bitcoin rally of 2020. Now, at Crypto Ripto, we have been looking into the 4 seasons: spring, summer, autumn and winter. Obviously no ideas there. Ideally, investors will buy spring tokens while they are in the cheapest to produce and hold them over a period when they become the most expensive. Sounds easy, right? As the seasons change, investors will switch these spring tokens to summer tokens, which would presumably rise in value next. And so on though the later seasons. In a perfect scenario, an investor would trade spring seasons for summer when spring tokens are the most expensive to produce and summer tokens are the cheapest, increasing the total number of tokens they own. Then when the summer tokens peak, the investors would trade them for autumn tokens at their lowest point, accumulating even more. And the way this is determined is we look at historical data to see what tokens normally peak around what times, what rise to tax, what rise to halvings, what rise to FUD, FOMO the most, and this can be ever changing. So finally, with weathering the crypto storm, these peaks and valleys are the cause of interim-based production cuts, similar to the Bitcoin halving. For example, in June, spring token production will be cut in half, making it more expensive to produce than other tokens. By the time spring rolls around again, users would convert their winter tokens to spring tokens and profit off their rarity, all without contributing additional real-world funds. Based on this model, hopes to provide an asset that consistently accumulating and rising in value, giving a safe space for investors to transfer their funds during a Bitcoin bear market. So rounding up, this is just saying that we put what we think are the top alt tokens and the coin tokens, and in theory what happens is the top 50 then tend to do the bigger pumps, then it drops into the bottom 50, then it drops into the altcoins under the top 100, and so on and so on. And we split that into 4 chunks, and obviously Bitcoin being the daddy of the coins with the top 3 or 4, maybe 5. Then it goes into the top 50 underneath that. Also, it depends on project news and a lot of data analytics that we look at from 3 different companies that trade in this method. So arming yourself with all that information, I hope you fully enjoyed it. Maybe you like that kind of method or maybe you don't. Maybe you like continuing trading at supports and resistance, or you're just a long-term bag holder. But as long as you're not a gambler and you're throwing your money blindly in, and you're, as we say at Crypto Ripto, trading smart, trading safe, and not getting wrecked.